Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is the 19th here. It's a Wednesday, and we had the market moving lower here in the earlier part of the trade in the overnight session, and also continuing during the day session. We have corn down 8 3/4, soybeans down 18 1/2, wheat in Chicago trading down 11 1/4 here on the day. So why are we trading lower here? Well, there's a couple of reasons. I think when you look at the futures market, you'll notice, one, we broke some critical support levels. I think that's more of a reaction to the fact that we are now kind of really switching over, taking a look at South American production. A lot of the reason why we rallied here, I think, especially when I talk to producers, is the fact that we had between August and really October, we had a very, very sharp downtrend. We didn't come up for air at all. We didn't have any sort of rebound. And when we had that sort of situation, I think there was a lot of end users that were really expecting lower prices. They had maybe locked in supply with basis, but not necessarily priced it in the futures market. I think what happened in October is the fact that we started to get a rally, and then we had a lot of these end users trying to chase the market here, trying to get some price locked in. That is really in combination with short covering. I think that is really what contributed to this rally. We did have some fundamentals. When we talk about soybeans here, of course, we had a very tight supply. Soy meal really led the market higher here throughout most of October. The tightness in supply in soy meal really translated well over to soybeans. That helped reach us up over that 1080 price. But when you look at the fundamentals now, I think there has been a bit of a switch in mentality here, particularly for soybeans. Take a look at the daily chart. You'll notice that not only did we try to make new highs earlier this week, but now we are trading below the 100-day moving average. We have broken that uptrend that has helped support us here, really in this uptrend that started in the beginning of October, and now we're trading sharply lower. Right now, we're around the $10 mark. I wouldn't be surprised if we get a little bit of support around $10 here for this January contract. But really, looking forward here, we have South America. They have they seem to be moving along. They've progressed well in terms of planting. Right now in Mato Grosso, they're 82% complete. In Paran, they're 76% complete. Those are very positive. Really, we're only 6% behind pace here down in Brazil when you're looking at planting. They're getting good moisture. That's going to help really during that crop development. So yes, they are a little bit behind, but they are getting good moisture, and that's very positive and going to weigh negatively here on prices in Chicago. When you look at Argentina, they are getting excess moisture, but this shouldn't really cause too much planting delays here in the coming weeks. Only minor and kind of regional planting delays. So all in all, South America is looking pretty good here. I'd be a little bit nervous with that card kind of playing out as no real risk premium being added to the market. Now we have the supply scenario that has been driving soybeans higher. That's starting to ease. We have had a very tight cash market, and that's starting to kind of loosen up here a little bit. The supply of this 2014-15 crop, 94% was harvested here for soybeans, so that we're going to start catching up here. I'm concerned. There was talks about Argentina soy meal hitting U.S. soil. A lot of reasons here why there's a good chance this soybean rally is over and we could start really cupping over near lows, or at least moving sideways here in the near term. Let's take a look at the wheat chart. We didn't talk a whole lot about wheat here this session. You'll notice we're coming back right around that 100-day moving average. I wouldn't be surprised if we get a little bit of support here tomorrow. So, tomorrow we'll have to see if this sell-off continues. And really, I would urge producers out there to look at the bigger picture and say, yes, we have had a rally. Do you expect us to go back up to the highs? I think there's more risk of downside with South America moving along and being as productive as it has been. We also had ethanol production earlier on in the trade today. We did have an increase in ethanol production here by 24,000 barrels per day. Now production's up to 970,000 barrels per day. So that's very positive here. That's an increase over last week. Last week was an increase over the week before. So the trend here in ethanol production is improving, and I think that's going to help this demand side story here for corn. Unfortunately, it wasn't enough to lift us into a positive change on the day. One other thing before I go, export sales are coming out tomorrow. Keep an eye out. These are the expectations. Corn coming in between 500 and 700,000 metric tons. Soybeans, the expectations between 700,000 metric tons and 1 million metric tons. Soy meal between cancellations of 100,000 and actual sales of 100,000 metric tons. And wheat expectations between 300 and 500,000 metric tons. So we're going to have to pay close attention to this. Last week's soy meal was really only a little bit positive. I think this demand story that we've been talking about that has been driving soy meal prices higher here, I think this export sales report is going to be important. If we don't have positive soy meal sales, if we don't have continued bullish news here on the demand side, I think this could also weigh negatively on prices here, particularly for the soybean complex. Other than that, guys, that wraps up today's show. If you have any questions about what I talked about, please give me a call. Number is 877-472-4607. And remember, if you haven't done so already, take a demo of our mobile trading platform. It's on grainhedge.com. You can go there, take a demo, see what it's like to have really live quotes in the palm of your hand when you're out of the office. So a lot of our producers really enjoy having that sort of mobile freedom. Thanks a lot for tuning in. We'll see you here on Thursday for the Export Sales Report.